Hello and welcome to ETBFSI.com by the Economic Times. My name is Amol Dethe and today I'm in conversation with Mr. Vikas Satija, the MD and CEO of Shriram Wealth. Vikasji, glad to have you.
Good afternoon, Amol. It's nice to see you.
Thank you. To begin with, I have my first question specifically about, how the wealth segment is, elevating because what I see today is everybody, every financial institution, specifically the banks or even the traditional companies are also setting up the wealth arm in their branches or in their banks. Alternatively, mutual funds and also everybody, those who are into investments arm are pushing their wealth segment quite aggressively. Everybody is trying to get into the affluent business. What are the major reasons that you see that every institution, specifically from the BFSI side, wants to get into the wealth segment today?
So, Amol, just to give you a quick background, in
Sure.
terms of if you just look at the current GDP of India, it's close to
Mhm.
$4 trillion. As
Yes.
per Viksit Bharat, the same number is anticipated over next 2 decades, which is 2047, to be close to $35 trillion. The current organized wealth, which is getting saved, is $1.2 trillion in terms of saving, which is being done out of the $4 trillion. If I do same maths, the $1.2 trillion estimated to be close to $10 trillion plus over next 2 decades. So clearly, from the current space of savings, if I look at $1.2 trillion moving to $10 trillion, you're talking about almost 8 times the current number, which is going to grow for India over next 2 decades. So there is enough scope for each of the players to look at in terms of setting up the wealth arms and making sure to manage it. Another reason which comes into mind as top of recall is if you look at globally, the organized wealth players which are there in the developed countries, they manage close to 60 to 75% of the wealth. Whereas in India, the organized wealth segment is only 15%. So whether this number moves from 15 to 30 or 30 to 45, time will tell. But clearly there's a huge scope. So that's, I think, the major two reasons why each of the banks, institutions, wealth management firms are wanting to participate in this euphoria and want to be in the industry at the time to make sure they handhold their investors and maximize their wealth.
Okay. It was good to begin with, Vikas, and we do understand the whole 2047 target and the $4 trillion economy. In fact, there are various reports which says that India will become third largest and perhaps the second largest also maybe in next 10 to 15 years. So we can see the great rally. Let me learn more from you and try to understand, the whole aspect of wealth. So what kinds of opportunities, if you could elaborate more in terms of obviously India is becoming big, but what kind of opportunities do you specifically see in the wealth segment for a players, companies like you? How big is India's whole wealth segment according to you?
See, as I mentioned, Amol, if you look at the current savings at 1.2 and moving to 10 trillion, I was saying 8 times the size.
Right.
And organized space is only 15%. So that gives an ample opportunity for people like us to come in the organized space and manage wealth for clients.
Right.
Now, when we look at from a wealth management point of view, earlier the things were very simple. It was those traditional products where I looked at savings account, current account. I had FDs to manage, I had RDs to manage, which has now changed. You can look at what's happened to the mutual fund industry. By retailization, the SIPs have actually started gaining 28,000 crores a month. And that tells you the story that that's the kind of participation which we are getting in the capital markets coming through the retail participation. So if I look at the change in trends, what has happened in the wealth industry from where it was earlier to now, I
Mhm.
think it's very, very clear that people are looking at various aspects. So you're looking at long term by building in, coming in through mutual funds, by looking at PMS, by looking at AIFS, various instruments to coming in. At the higher risk categories, people are looking at unlisted opportunities. If you go even further, people are looking at private equities to come in. People are looking at real estate funds. There are infra funds which are available. So the opportunities in terms of various products have grown. And as institutions, we clearly believe that there is an opportunity to look at from clients' point of view and give them solutions what they are looking for. I think that's what our whole motto is. Our funda is simple that we follow wealth your way. So that's what we look at. So we take the client thing in perspective and then we work towards seeing that going in. Coming down to segments per se,
Hmm.
see, I
Hmm.
think various segments, if I look at, and this is a data the other day I was reading in one of the reports, very clearly tells us that if you look at the 100 million plus club in India, so India, in terms of the GDP numbers, we are at fourth rank in the world, whereas 100 million plus numbers are we are at three. When I look at the next number, which is in terms of $10 million plus, the same number comes to fourth. So we are ranked fourth. Actually, we're ranked fifth. Sorry, my mistake. It's not fourth, it's fifth rank. When I come to the next level, when I say $1 million plus, India, as per GDP, is fourth ranked, but we are 14th ranked in that context. So there's a huge opportunity in the $1 million plus club to look at. If I go even further down, if I look at the affluent segment, which is typically, let's take $250,000 plus, the number of households in India is only 30 lakhs at the moment
Hmm.
with a population of 140 crores, with with household numbers in excess of 50 crores, I think the number is far, far lower. So the
Hmm.
growth opportunity, what we see is clearly in the affluent and HNI segment to really take off and be a strong boy in growth.
So I got a great sense of you know the interest and how do you actually look at this particular segment. I can also see the rise. 50% was it, what was in fact a lot of wealth managers also saying that it's a very unorganized market and all. But out of the segment from the affluent side where people wants to invest, is there any study, Vikasji, you have done in terms of how many people actually wants to invest and make money? Because sometimes what happens is we assume that people of this particular caliber have money, but they want to invest, but perhaps they have their own ideas. So how many actually of these people wants to invest and make millionaires on billionaires? Because many of these people also choose their own ways, maybe investing in real estate or something like that.
Samuel, before we started this business
Hmm.
and launched it in June, we actually went across, did surveys, and did some research in the market and said that what is the interest and what are people looking at. I think one thing which was coming very commonly was that with the entrance of so many players, with so many new sophisticated products coming in, I think there was some confusion across people to look at that. What are the kind of products they should be looking at? How do they create long-term wealth? What do they do to maximize it? One thing is sure, everybody wants to maximize wealth. The challenge here would be that which are the right asset classes, which are the products which one has to look at. So I think keeping that in view, I think the professional wealth management business is in the right space where one has to look at going and meeting these clients. And in the affluent space, I think clearly the aspiration is far bigger. If you meet these people across the industry, the affluent segment is clearly looking at that how do I make the first million and then the 10 million and then the higher number. But you are right. I think the biggest confusion which is coming into minds of people is that where should I invest and what are the products? So the whole approach, like what we are trying to build in our businesses, let's have a solution oriented approach. Because what's been happening in the industry is everybody goes with a product push. So I have a particular product and I believe that's the best. I have not checked out with Amol or even listened to Amol that what is he looking at? What is the ultimate goal in his mind? What's the long-term thing which he's looking to build in? I go with a particular product and I say, Amol, this is the best product, you should buy that. And then later on, what happens is that may not fit into his risk profile. What's important right now is to listen to your clients, listen to your investors, understand what is their need, build a plan, do asset allocation, and then put the right solutions in mind. And that's what we are wanting to build very clearly to make sure we go into that side of it.
Certainly. So now tell me very clearly, and in fact, that would be very beneficial for people at large who are watching this particular show or interview to understand how are people, or specifically your customers, are trying to maximize their wealth, and what are the alternatives that you're offering them? Or in other words, where people wants to invest today?
Okay, Amal, let me take it in two parts.
Sure.
Let me first share that what is the platform we have created and what's the solution providing we are doing at the moment. So let me put it like this: what we have done is when we say wealth, wealth doesn't only have to be thought through only as wealth as one part, which means surpluses of money to be looked at. We have created a platform where we're giving solutions for wealth management. We are looking at lending solutions. We are looking at global opportunities for people. We are looking at taking care of the protection needs. and we are taking care of the legacy and estate planning, which means intergenerational wealth, how one can pass on. So these are the five pillars on which we have built it. Now, coming down to the second part of it, where are these guys investing? I
Mm.
think clearly when you look at mutual fund is something which is gaining the maximum momentum. So direct equity and mutual fund is something which is clearly the top picks across all the affluent HNIs and ultra HNIs. But the new trends which are emerging and which is coming across over last or post COVID, I would say, I'll say 5 years from now, what you've been seeing is a lot of monies have been flowing into AIFs, which is alternate investment funds, and PMSs, because clearly these are more customized products at a higher risk, but that's where the investments are moving in. And a lot of HNIs and UHNIs are using this to park their investments into.
Okay, noted your points. And how competitive this market is, because everybody wants to get into this space now. Like I said in the beginning, obviously the opportunities are huge, but again the pie is perhaps too small. So how difficult there are PMS, mutual fund, alternative investments funds. The banks have their own subsidiaries, and so many affluent segments which they have launched. So how competitive this space is and how difficult it is perhaps to reach out to people and perhaps, onboard the customers.
So, Amol, I want to again pocket into two parts.
Sure.
I'll answer the second part first, how difficult it is. Let me just put it simply. I think the industry size is growing at a rampant pace and the opportunity is huge. So
Mm.
I don't foresee that one would say that there is overcrowding. Yeah, if there is overcrowding, only 15% penetration is there. If that
Right.
penetration in the organized market moves to 30, 45, 60, what your number you want to put in, I think there's a huge scope for everybody to come in. So I wanted to make that as a clear point, saying that the size of the market and the opportunity itself in growing India is humongous. I
Mm.
think there are enough place for every player to come in. What's
Mm.
very important, and I think that's the key to this thing, is that how do you work on solutions? How do you get your investors into play and make sure that you keep them in the forefront? Work on solutions, what they are looking for, get them the right set of solutions coming from that side,
Right.
rather than thinking that, oh, these are the products which are liked by my investors, or these are the products which are underlying.
Mm.
Yes, it's a competitive market from a pricing point of view. It's a competitive market because there is no products which takes more than 10 minutes to replicate and launch. But it
Yes.
can't be a product oriented solution. It has to be a solution which has to be based on goals. And I think that's what we are working on. So clearly, I see a huge opportunity in this industry to work around. And clearly, as I said, that this industry needs more organized players to come in. And we are one of them who's entered it now.
Okay. That is meaningful. But let me get something broad thoughts here. Maybe not a straightforward question. Financial inclusion has reached to a different level. We have a number of banks, institutions, fintechs, and they're trying to make a good difference. Now, a number of people also have the bank accounts, which is fine. But when it comes to the market, there are a lot of investors still looking at specifically trading because they want to make money or they are looking for a multi-bagger in a day. So that's one aspect of it. Uh, are people really interested or investing their time in preparing the goals, giving the face to the investment manager, and taking a view in terms of, okay, I have to invest for 5 years, 10 years, 15 years, right? Are we reaching to that level, or we are still okay, abhi SIP ka rally chal raha hai, let's put it there and let's see what happens? What is your view?
Well, let me take you back slightly. And I want to take you back to 2000. When it was 2000, the total mutual fund industry was a very small size. Today, that industry is almost touching 80 lakh crores if I go by in terms of size. The SIP book
Mm.
was something which, in my previous organizations, we used to go and talk about, saying that how do we talk about SIPs? And that time I used to be a part of the asset management. People used to look at us and say, why should I do SIP? The
Yes.
industry has grown from 0 to 28,000 crores. This time, if you look at the kind of outflows, what we have had from some of the institutional investors, especially the foreign institutional investors, have been huge. But Indian market has still withheld the shocks. And I think it's a lot to do with the retail money which is coming. Investors are ready to park it for long term. And all those monies which are coming into SIPs are clearly giving that debt to the capital market, which I think was not so much if I would have gone a decade or 2 decades back in the Indian context. So I think that's a big change which has happened. Coming back to the investment side of it, I understand that in the euphoria, you would have X number of trading accounts open. Everybody is looking for a multi-bagger. But history tells you it's the long-term investors which make money. It is never the traders which make money. And this is proven by various data points. Even if you look at Warren Buffett's story, I think the story is very clear. It's long-term investment which has created wealth. So keeping that in view, I think investors are looking at long-term. There is no reason. There would be certain segments in certain sets at various points of time getting lured with short-term opportunities and looking for trading opportunities. But wealth has to be created. I think the first thing right has to be the asset allocation. If you get the asset allocation right, the second step has to be very clearly with the long-term objective. If these two are in play, I think that's what makes maximum money for anybody. So I think as we are progressing, so is the market maturing, so is the investor maturing, and so is the industry getting matured. So I think it's happening simultaneously.
Okay. Well, I buy your point on that, that the industry is getting mature, but the current situation is, slightly volatile or maybe unable to decode because traditional instruments are not giving the value which everybody thought they will give. For example, fixed deposits, the saving deposits, the interest rates on the which the banks offers are quite minimal these days. That is one. Second is specifically bonds are also volatile because of the global markets, right? So how do you see the whole return aspect is churning out now, considering the volatility in the market, not because of our problems but the geopolitical tensions?
See, let me put it like this, Amol. Geopolitical tensions, obviously, at different points of time, you would have certain risk which keeps emerging and keeps moving ahead. But I think the good point for India is at a GDP growth, one can say 6.25 to 6.5. The numbers can vary between different analysts. But let's, for our time's sake, let's understand at 6.5% with inflation at around 3.5%. You are saying a growth of 10, 11% on a consistent compounded basis is what we are expecting for next 5 to 7 years. I think these certain issues which will happen across the borders will keep the interest alive, but long-term story for India is very, very strong. So I don't foresee that you may get blips interim. You may have situations that certain things which happened with our neighbors in May or certain other things which may happen at various points of time may keep giving you blips and maybe more opportunities to invest. If the long-term objective, I think very, very clearly, India is one of the sweetest spots at the moment. It clearly makes sense to look at long-term investment, and one can look at a double-digit growth easily on the capital market side.
But as you said that you're also offering investments abroad, or maybe people can also invest outside. Do you see some temporary pain because of the Trump tariffs and the
See,
whole
again,
geopolitical
in the
tension
global
issues?
opportunities, what we are doing here is Amol, see, we have our partners, which is the 50% ownership is today with Sanlam Group. So Shriram and Sanlam have come together. It's a 50-50 joint venture for the Shriram
Hmm.
Wealth. We're working very closely with them. And we are looking at various opportunities for our investors and clients to look at into markets where we see value. So India would be growing at a good pace. You may have other markets in the emerging space where we see there is enough value. So those are the few markets where we are trying to work around and see how we can get opportunities for our clients to do. The second thing which has happened here is that all the large investors, and especially the UHNIs and the HNIs, have majority of the money in India. To get the opportunity to diversify some part of it, it makes a lot of sense to look at some of these international investments to do it. Yes, you have to be extremely careful keeping geopolitical risk. So if there is a war going on in particular two countries, I need to avoid to get into those countries. I need to make sure that if there are some trading partners with those countries, I need to keep some arm's length distance with that. But still, there's enough opportunities there. It's enough opportunities which is there. India is growing, and so is some of the other emerging markets, which we can definitely look forward and see where we can invest.
Okay. There are a lot of reports which says that obviously India is growing and a lot of families have also grown. They have become multi-billionaires, billionaires and millionaires in last couple of years, and that trend is growing up. Where do you think that the next set of billionaires or multimillionaires will come from, Vikas? Which segment do you think will be far more investor friendly and will make more wealth going ahead?
Someone, let me put it like this. I think all segments will make wealth.
Uh-huh.
What's happened here is that we start classifying that is it the IT sector which will do better? Is it the startups which will make more money? Is it there going to be a certain banking financial services which will make money? I think rather than classifying that, I think India has an opportunity across. What the next new trend which we see is very clearly that in tier two, tier three, the growth trajectory would be very, very fast. Keeping that in mind, I think the opportunities in tier two and tier three will also start rising. So if I had to pick up the millionaire list in erstwhile avatar, I would have said, let me restrict down to top 4 or 5 cities. If I now have to look at the new list, I would say I would want to go to a lot of tier two and tier three cities because I clearly see there's enough wealth getting created and huge opportunities in the wealth management segment to go and cater to some of these new millionaires.
One more question here, Vikas ji, is I was looking at a lot of data, and though we have a great positive story about how India is creating, wealth for lots of people, that segment of people is limited to the family of families and the entrepreneurs. What about an individual investor? Or in other words, when I will make my $1 million and and become the multimillionaires, what are the investors doing? Because the segment which is making money are more the family and the entrepreneur oriented.
Well, I think there's a big shift now. Over last 24 to 36 months, if you start looking into balance sheets of a lot of the listed companies or large companies or startups, you will realize that there are a lot of professionals who are now coming into it. So in a $1 million club, you will start realizing that the numbers which are increasing is actually professionals and salaried segment which are growing at a faster pace. Clearly, there's a huge opportunity because as the businesses and companies grow, so would the employees be, and so would the salary segment. So, if you would have to ask me that which are the two segments where we are targeting, clearly we are targeting on the self-employed non-professionals and the salaried segment because we clearly believe that these are the two segments which will grow at a much faster pace than the others. And the numbers are changing. You can pick up any of the good stories across various large companies and pick up the balance sheet, and you will see far more many names than only the promoter now being in that list. So the millionaire list is definitely getting addition of a lot of
Okay.
professionals and salaried guys coming in.
Certainly. So last question, Vikas, then when do you see a billionaire coming out of Shriram Wealth? When will you manage when will you make that happen? What are your targets? How many customers do you have? When will you have, what is your aim to have a large number of customers? What kind of revenue profit do you expect maybe in next 2 to 3 years? Just give us some roadmap from Shriram Wealth Lab.
Okay. So, Amal, we officially launched in the month of June. This is
Yes.
June 2025. Our target segment is clear. We are looking at clients in the HNI, UHNI, and the affluent, all three spaces at the moment. As we go ahead, we are looking at how do we cater even to the mass affluent and the emerging also. So we are keeping various segmentations. So if I have to segment, I will say there are three segments which we have put in. There is 10 lakh to 2 crores. There
Hmm.
is 2 crores to 25 crores. And the third segment is 25 crore and above. These are the three segments which we are working on. 2
Hmm.
crore and above, we have already launched a proposition. 10 lakh to 2 crore is something we want to launch it maybe 6 months from here. That's our target internally to look at. Sorry, because we want to democratize wealth and make sure that we get across to all segments. Our target is simple. Next 5 years, we want to manage close to 50,000 crores of AUA around with 500 wealth professionals. That's the number we have targeted. Both the groups have a long-term legacy. So if you see Shriram is a 50-year-old group. If you look at Sanlam is a 100-year-old group. So we
Correct.
want to create a legacy in wealth business and make sure that Shriram Wealth is not only remembered till the time we are in this business. It should be remembered post some of us who are on the screen here are even seen. So I'm saying that the whole thought is that how do we create legacy for the wealth business and make sure that it goes beyond generations and beyond individual people. Coming back to your answer of creating billionaires, I think very clearly the thought process is that as all Shriram Group companies have done, that we made sure that employees are the one which are equal beneficiaries as the business grow. So we want to have a similar culture built in here in Shriram Wealth too. So as we would graduate and grow into business, I'm sure there will be some of my colleagues definitely coming up the curve and being part of that story for sure.
Hmm. I think that's it, Vikas. You have given a detailed view on specifically the wealth segment. But lastly, if I, specifically look at today's market, despite a lot of tensions, tariff issues, the market is still going up. But the growth has still challenges, the unemployment has still challenges. How do you see that whole economy is going to play a role maybe in next 2 to 3 years? If we look at wealth as a segment, do you think that people will look at market as an investment factor far more seriously? And more importantly, is it sustainable? Again, you have elaborated and given detailed answers, but just to add more reference points to it, how do you see going ahead the whole economy and the wealth segment maybe in next 2 to 3 years?
Well, from an economy point of view, I think India is still poised at a far better situation than a lot of our other people across the various parts of the globe. So we are far better positioned. If GDP is at 6.5% projected with 3.5% inflation, I think it's a double-digit growth, which very few economies can boast about in terms of nominal GDP. So I think that way around we are perfectly placed. Yeah, there are blips, there are issues across various for some of the segments
Hmm.
which will keep happening. And as I always say that you will not have a straight run. You will always have some blips in between, but long-term trajectory is still very good. 2047, I think the growth plan from the government is very clear. I think all of us are following that route and clearly believe that that trajectory is on and we are moving towards it. Coming on the wealth side of it, GDP grows, people will have more savings. That more savings will get into wealth. So
Hmm.
that wealth has to be getting managed by somebody. So the opportunity is huge. I think the biggest change which we all as wealth management industry professionals have to do is move out of product push and move into solution provision. So we need to provide solution rather than looking at product pushes. I think that's the change we want to
Hmm.
bring about in our segment, in our business. We are very clear. We are clearly a firm which believes on solution providing. If we are able to address that need, I think there's huge scope for all of us.
Yes, I think that's meaningful one, Vikas. Thanks for sharing all that, and it was nice to know all those aspects of the wealth. Thank you so much for your time and sharing all those inputs.
Thank you, Amol. It was a pleasure to be here.
Yes, thank you, and thank you so much for tuning into etbfsi.com.